Good evening, Trade Flair family. Welcome to the Nightly Breakdown, where we break down what happened today in the stock market, as well as give you an idea of what we're looking at into tomorrow. Now, before we go over and dive into some technical analysis, let's look at our sectors and indices and see where the breadth is in the market. So looking at our indices, the IWM led today. Right behind was the Dow, NASDAQ, and then the SPY. So the Dow was moving because we saw financials moving, energy moving, but seeing that IWM lead tells us that risk is back in the market, and this was really displayed through the crypto market, through AMC, the meme stocks. So definitely something to keep in mind as we head into tomorrow's jobs report. Looking at our sectors, we had financials, energy, utilities, and consumer discretionary leading the way. On the downside, we had healthcare, materials, and industrials. Overall, everything closed up nicely. We had TLT down, which is good for those banks, and then we see that VIX and that UVXY kind of easing off the gas as the jobs report came in as expected. So it's Thursday. We're gonna skip right to the plays, right to the meat, headed over to conduct a technical analysis of the SPY ETF, which tracks the S&P 500 index. So looking at the SPY today, looking at the overall past week and a half or so, we've been stuck inside this range, which is a good thing because we closed above the range today. And we're looking at these balances, these ranges. When we look above the range, we're trying to target the doubling of this range. So as it stands, closing above the range, the top of the range, we could be targeting the 445 level, which would be the doubling of that range. With jobless claims coming in as expected today, we can expect a decent jobs report tomorrow. With bond prices finally starting to come down and yields kind of getting the bounce, this could be pointing towards a hawkish Fed. And as unemployment decreases, that's kind of going to throw that stagflation argument out the window. So the jobs data is going to be key tomorrow. As it stands, we're expecting good jobs data after seeing what we saw this week. As it stands, I would not be surprised to see SPY blow the top off tomorrow and look to double that range all the way to 445. Now, if we wake up bearish on some bad jobs news tomorrow, then we're looking at the failure back into the range, and if we take out today's low, then I think we could probably fail back to the bottom of the range at 437.20. So keeping our levels in mind on the downside as well as we head into tomorrow. So let's head over to our Qs, look at our NASDAQ 100. So looking at the daily here, clear breakout today above all-time highs, closing above all-time highs. The thing is though, is that we need to be careful because there's no volume on this candle. So keep in mind, we broke out today, but it was also the lowest volume day on the NASDAQ 100 since the beginning, or actually since June. So not a ton of longs being initiated into the jobs report. With volume like this, we're careful of false breakouts. It's going to depend on how the volume ends up coming into tomorrow, so keep that in mind. We are trading on low volume today. We were trading on low volume in pretty much every index. We saw a lot of money flood out of bonds and kind of go into crypto, Ethereum especially, so keep that in mind. So as we head into tomorrow, bullish on the NASDAQ, but just keeping in mind that there is low volume traded today. So next, let's look at our bonds, going over to TLT, and TLT is going to track the price of the 20-year treasury, or it's going to be the inverse of the 20-year treasury yield. Now, bonds often play off the technicals really well, and they can tell you a lot about where everything's about to go. So as you can see, a lot of bond traders have their eyes on this support trend line here that I've drawn, and we still have not closed beneath this support trend line. And if we do get a close beneath, I expect bonds to start to go lower, meaning yields will start to go higher. So something to keep in mind is that yields aren't supposed to be up here unless there's something that people are worried about slowing the economy down, or if we're not going to reach our full recovery potential or something like that. Usually when we see inflation like this, we should see bonds start to go down, or TLT would start to go down, because yields would be going up, pointing towards the fact that the Fed would react to slow inflation by raising rates. But for some reason, for a lot of different ideas and mixed fears for the past few weeks, bond rates started to go further to the downside. So TLT kept shooting up and everybody was starting to get worried about a global economic slowdown. People were worried about our jobs ever going to come back. People were calling this the Great Resignation. Now today, after seeing the jobless claims come in as expected for the first time in a while, we saw the bonds hint towards the fact that, you know, if we do get good jobs data tomorrow and further on as we go, that's going to point towards substantial further progress. And Powell did mention in the last Fed meeting that we were making, quote, progress, but he did not say substantial further progress. And he did not specify on what substantial further progress is, but he does keep tending to mention the fact that, you know, we want to see a full grasp on the COVID pandemic, and jobs is going to be a key indicator as we head into the historically volatile months of August and September. So as we head into Friday, we're looking for the break of this support trend line. If we do break beneath this support trend line, then we are going to start to look bearish on TLT, which would be good for the XLF. And as long as the move to the downside isn't that aggressive, it could honestly bring back a risk on appetite. So as yields go lower, as we saw in the past, the reflation trade boom. We saw industrials, financials, materials, energy all boom. So keep that in mind. If we do break this support trend line, it should be interesting. Looking especially at the break of that 150 level. If we break below there, then we probably could start to head down. So keep that in mind as we head into tomorrow. So let's dive into some plays now, starting off with ChargePoint, and this is going to be an infrastructure play. And looking at this one on the daily, we have a huge breakout candle here, and it's breaking out of this falling wedge, which is coming from a downtrend. And this downtrend is actually not a, you know, larger downtrend. If you pull this out on the daily, we're still creating a higher low here. Now heading into tomorrow with risk on appetite back in play, this could be really nice, especially with that infrastructure talk in the news. If we do end up seeing a breakthrough $25 with some nice volume like we saw today, then I'd be interested in taking a trade up to probably around $27, where we see the top of or the bottom of that gap. So a lot of people like this one, especially for the infrastructure deal. And you know, this is an EV charging play. There's a lot of hype around this one. It's a low float, it can move fast, so keep it in mind as you head into the rest of the week. So next up on the watch list is going to be Twitter, and I'm going to pull out a combination pattern here. It's going to be the cup and handle, and you know, this one's not really long and drawn out like I usually like it to be, but it's, you know, it's got a cup, it's got a handle, and the handle's actually trading like a range. It's got a resistance around 70.91, and it's actually got a breakout point. This whole pattern's got a breakout point around 73.25. Now if we do go ahead and take out this $71 level tomorrow, I'd be interested in taking a trade for that test of that 73.25 level. Now on that break, I wouldn't really cherry pick these highs, but I say we go up to around that area, around 78.83. So that's something to keep in mind. If we do break above that level, there is some room to the upside. So looking at Twitter as we head into the rest of the week and into the rest of the month. Next up, let's head over and look at Coinbase. And like we said, risk on is kind of coming back into play as we see TLT going down and as we see those jobs coming back. So looking at Coinbase here, we're seeing crypto rocket, and that's why I like this one especially. So looking at this green continuation candle breaking out of this resistance trend line, breaking out of this recent downtrend, honestly. So looking to possibly squeeze some shorts and potentially look to reverse the trend here. So as we stand looking to take out that $260 level, in that case we would be looking for a potential run for all the way up to $300 pretty quickly. So keep this in your watch list heading into the rest of the week and into the rest of the month. August is known for volatility, and so is September, and we saw what happened with crypto last time we saw a lot of volatility. So keep that in mind. Next up, let's go over and look at Uber, and Uber looks really nice after bouncing off of this support trend line that we're looking at here. And look at all of this volume here, this positive volume off of this support trend line. It looks like this thing is ready to go higher. They gave a positive outlook and said, you know, the worst of the employment, the driver shortage is over, and the driver shortage has been affecting their profit margins, which has been decreasing the attractiveness as an investor, a value investor. So as that driver shortage kind of wears off, that's going to be a catalyst, and from this level it looks like we definitely have some room to the upside. And seeing all of this volume around here accumulating, we're definitely seeing long-term investors getting long right here. They're calling the lows. They're saying, hey, this thing's been beaten down, it's been beaten to its lowest value, and this could potentially be a reversal point. So keep this in mind. Uber is at a key level. Next up on the watch list is Roblox, and looking at Roblox here, we are breaking out of this recent downtrend. We had a breakout candle yesterday, and today was a retracement day, and we still ended up, having a nice lower wick, and we closed above this 618 retracement, meaning we could be reversing out of this downtrend. Next, what we're looking for to happen is we need to have yesterday's highs get taken out, and then we possibly, move up and break through 83.50, where we potentially then start to move into an uptrend, create a higher low, and that's where we would potentially see a lot of longs and a lot of volume start to move this thing and run this thing back up, because we've seen what Roblox can do. We've seen what type of hype and energy it gets post IPO, so keep this in mind as you head into the rest of the month. So next up on the watch list, or lastly on the watch list, is going to be CrowdStrike Holdings, and this is one of my favorite growth companies, and I really like how they've been performing this year especially. And looking at the daily here, looking at this balance, this is an obvious balance, and like we like to trade these balances, we're looking for the break, or the look above and go, or the look below and go, and we're trying to trade based on the look above and go. So if we look above and go here, we're targeting that doubling of the range, and that's going to take us all the way to around $290. So that could be a really nice trading opportunity if we do break out of this range. So it could definitely be a trading opportunity here on CrowdStrike Holdings, looking to take that $267 break to potentially run all the way up to $290. So keeping CrowdStrike on my watch list heading into the rest of the month. And that wraps up tonight's nightly breakdown. If you enjoyed the video, if you gained value, make sure you hit that like button, and don't forget to subscribe so you don't miss out on any live or educational content. If you're looking to join our premier trading community and get the best out of your $10 a week, then check out the link in the description below and join our Discord, upgrade to TradeFlare Pro, get half off your first free month using the discount code TFPRO2021. And don't be mistaken, we are not financial advisors, and nor do we claim to be. The stock market is risky, you could lose money. None of this is a recommendation, so use all of the information inside this video at your own discretion. And do not forget that time is your most valuable asset, so quit wasting it. Get up, get out, and go get it, my friend.